Okay, good day and thank you for joining our conversation today with Etop Ikpe, CEO and founder of Autochek. Etop will introduce himself and Autochek shortly, but I am Adesoji Solanke and I lead Renaissance Capital's Frontier and Africa-focused banks and fintech equity research and venture investing teams. Good having you with us here today, Etop. I was reading up on some of your past interviews and I thought what a fascinating journey you've had with some of the strong consumer-facing brands that have come out of Nigeria. For those who might not know about you, can you tell us a little bit about your background and how you ended up in the mobility tech space?
Okay, so I've pretty much been at the first of all, so thank you very much for having me. First, it's a pleasure to be on the program. But I've pretty much been doing technology for as long as I can remember. So really not just mobility technology, but I've come across multiple sectors. I went to school at the University of Lagos, and I think, literally from my final year, I started my first venture, which was sort of a custom solutions software company. And really for me, my attraction to technology has just been the fact that that's where we had the advantage. I just saw that there were a lot of people that weren't using it, and if we built businesses around this, and typically it was young people that knew what was happening and knew how to develop it. So I just saw it as a big opportunity. At the time, I never really thought about anything around venture or, I didn't have any idea around fundraising. So just honestly, the whole idea was basically, look, I think that, there's a lot of things that we can use technology to optimize or do better. And why don't we try to create solutions and sell these solutions? And, I started off with a B2B solutions company. It was quite good. And, eventually started an animation and TV production company as well. And then I moved into consumer internet with a company called Three Stitches, which was acquired by Deal Day, where I was then CEO. And, ran that, and that company was then acquired by Ring Gear. And then I've, had a stint at Conga as commercial director. I'd known Sim was the founder of Deal Day and the founder of Conga. And then, left that to start Class 45, built that out, and then that was acquired by Naspers, and I'm on Autochek now, basically.
Okay, that sounds good. So let's probably spend a few minutes discussing your transitions. So if you can just let us understand why you moved from Deal Day to Conga to Class 45, then Autochek, right?
So I guess for me, it was really around, when, Deal Day was a great experience. We're doing, you learn about the consumer. We're doing sort of daily deals. It was one of the biggest platforms in the country. People love deals, right? So, and I think that, sort of the transitions at the time, or the way I thought about it, we had gone into the market and, okay, what's the next phase for this business? That's how I was kind of thinking, what's the next phase? And we had gone into the market to seek some capital, and then an acquisition opportunity came up from that. And, it was like, okay, if we did this now, it just seemed like the right time to move, right? It just seemed like there was closure to that cycle. And I think the transition to Conga was really more around the building of the marketplace from a perspective whereby Conga was transitioning from a retail model to a marketplace-driven model. I mean, I dealt with, 40,000 different merchants. Deal Day was a platform that, you had to deal with a lot of restaurants, food vendors, mechanics, salons, spas, and then product sellers, right? Those were merchants. And digitizing, for me, my excitement with consumer internet has always been about digitizing, digitizing marketplaces, basically taking people online and helping them accelerate their businesses as they scale. That has always excited me, going to people who never thought that their businesses could be impacted by technology and actually bringing them and then seeing their productivity significantly increase. So I work very closely with a lot, and at the time, you don't really see it as you're gaining a lot of experience or expertise around that sector. But that's what we did, right? Helping them to grow and helping businesses grow and getting businesses online and getting businesses to generate revenue and meet their customers online. When I look back now, it's very, very interesting how everybody's online now, right? But, we're talking about times when nobody thought that there was any relevance to going online, right? In fact, if I think about it, my first consumer internet business, there were maybe 100,000 users on Facebook at the time.
Right.
And right now they're about 40 million in Nigeria. So kind of really seeing things transition. And so really just getting people to come online and stuff like that. I think at the time when going into Conga, that was really what the strategy of being driven was. And I think the belief was that there was a lot of value I could bring there. But also as I transitioned there, I was also thinking about what next, what are the next sectors. And personally for me, I'd always kind of like all the cars that I had bought and sold personally. I'd seen that the experiences were terrible online. You understand? Like, I saw that there were a lot of issues around it. In everything that I'd done previously, I was doing high volume and high frequency, but low value, low to mid value. And then I started I was actually carefully looking at various sectors, to say, okay, where were there big problems? Where were there big challenges, but big opportunity? And in careful research, I narrowed it down to the automotive sector. And that's kind of what led to sort of how we transitioned to Class 45. I like the fact that it was a high value, high volume, and high frequency play, right? Makes it worth getting up in the morning, right? And if you can crack it, it really could be something significant. And that's typically what led to the transition there. And I think for me, I've always seen the automotive sector as something that, if you look at how the world typically manages the automotive sector, right? You look at the first set of people that got bailouts in the US. You look at how significant it is to every single developed country has its own automotive brand that is driving. Today, one of the most valuable companies today in the world is Tesla. Automotive mobility and its impact on productivity and lives. You look at Rivian, for instance, that's IPOing the autonomous truck driving company, Rivian. And you look at these things, and the mobility sector and automotive sector is so important to every single economy. And so for me, even in its massive fragmentation, it's still a $90 billion industry in Africa. As fragmented as it's organized as it is, right? It still fundamentally feeds a lot of families. It is so key, right, to everything I do, especially when you consider like transportation and the status of our infrastructure in general in Africa, right? And for me, I just knew that, look, there was a huge opportunity here if we could clean this up. Of course, as we got deeper into the sector, you see a lot of scary things that were there, and you kind of make that personal commitment, say, okay, I'm not here as a fluke, and I think that there's a lot of value to be created, and we're basically going to focus on creating this value. And so the things that we focused on, first of all, were basically ensuring that things that were not possible before, such as like inspection reports, we started to standardize things like that, being able to standardize the way cars are viewed, right? So that it makes it common. You can commoditize that, and then you focus on pricing and things like that. But as we went deeper and deeper into the industry, like I said, we're saying earlier on, right? We started looking at how do we actually increase productivity for all these players across the industry. And then you begin to realize that, the biggest missing piece in the automotive industry is financing. An emerging market average is about 65 to 70% of automotive transactions have institutional credits attached to it. So it's not actually normal. When you look at the average GDP per capita in sub-Saharan Africa, you look at the average ticket size of a car at $5,000, and the average GDP per capita is, about 1.8, in sub-Saharan Africa. Nigeria is about 2.5, Ghana is about 2.5, Kenya is about 2.5, But if you look at that, where do you need credit most, right? And so it's less than 2% compared to 65, 70% credit penetration. It's less than 2% in sub-Saharan Africa. So it's very clear to us that whatever we're looking at in terms of the market, this $90 billion industry is false, because the key driver that is going to accelerate that industry is missing. And so if we focused on that, fixing the fundamental basis, the fundamental reason that the industry we consider to be massively underperforming, what could that $90 billion become? That is the basic thesis around our business model. That is why we're doing what we're doing. We believe that it has so much exponential value that can be created. I mean, if you can get out to 25, 30, 40%, can you imagine the lives that will be impacted? Can you imagine, the overall value that will be created? If an industry that has less than 2% credit is generating $90 billion every year across Africa, and that industry basically moves to an average of 20 or 25% or even 30% credit penetration, what happens, right? And that is our basic focus. course, is increasing credit penetration.
Okay, no, sounds good. Before we get into the business itself, I wanted to just ask a more high-level question because you've had front row seat to observe you mentioned when you started, Facebook users in Nigeria was maybe 100,000. Now it's tens of millions, right? You had front row seat to observe this evolution. So how impactful do you think it's been, just that transition in terms of improving internet penetration, improving smartphone penetration in Nigeria, because that's one of your core markets? How valuable has that transition been to your ability to actually build what you're building today?
I mean, I believe that you're fundamentally an accumulation of all your experiences, right? So I don't think it's even possible for me to function without sort of the transitions that I've been through, right? And these are all learnings. That's why I don't take any. I personally, as an individual, I don't take any challenge as a problem. Everything is a challenge. I embrace challenges. We preach in the community to embrace challenges. They are all things that you use to develop yourself. And for me, I don't see mistakes as, or failures, right? Everything is just part of the learning. Everything is just part of the development. The most important thing is to be able to keep going. What do you learn? How you're adapting it, how you're applying what you learned, right? And then the third thing is also you take a long-term view. When I first started, I couldn't even tell people what I was doing. That's how imagine you saying like right now, you say you're doing tech, a lot of people are like, oh, cool, they understand what you're talking about. When I first started, I couldn't tell people. I would literally say I was doing something else because of how much people thought I was crazy, that I had an internet business, I was trying to do something on the internet. So I would actually say I was doing something else completely, just so that I wouldn't have to deal with another round of dissuasion or people saying that you're nuts or you're crazy, right? So I think that you also have to have a long-term view in terms of if today your market is that where the industry is today. But there's been a careful process and various types of contributors that have come over time, various platforms that have come over time, and everything is part of that evolutionary process. So that's kind of how I look at things, and that's how I think things are made up. So there's no experiences that are wasted. There's no experience that is false. Everything kind of adds up. So I think my view in life is always don't waste time, just get going, right? Because it's all part of it.
Okay. Right. So one of the things we spend a lot of time on is trying to understand the business and revenue models of African tech companies. We love writing about them, but we want to hear from you, the founder. So let's quickly go through a couple of questions. So one of them is, what is Autochek, and what problem are you actually solving?
So the problem I'm solving is access to affordable and accessible credits for people that want to buy cars, basically. And how are we doing this? What we've done basically, we have 3 core ecosystems that we interact with. So we have an ecosystem-based model, and we have 3 core players in this ecosystem that come together to provide the service to the consumer. So we're a technology platform, and what we do is that, first of all, we work with dealerships. So we have over 1,200 dealerships that typically are connected to the Autochek platform. And they connect to the Autochek platform today to process, to create another sales channel for themselves. Because fundamentally, previously, they've not been able to process car loans, or car loans have not been a sales channel. They've only relied on cash-based sales or outright sales, right? And so we give them a solution, basically. So you can walk into any dealership today that carries an Autochek signage, and you start processing a loan for a car. And I explain to you how that works. So what we do with our dealerships is that the software that they use helps them digitize their inventory. So they come onto our platform, get their cars inspected for our workshop network, and these cars are inspected. And then from here, it basically gets uploaded onto our platform. Now, our system and our algorithms typically analyze each car as they get updated, based on the systems that we have and the technology that we have. We're able to determine which cars are financeable or non-financeable. And the reason for this is basically because 95% of the cars that typically are driven are foreign used cars. And so when these cars come in, you typically analyze the vehicle and you can tell, okay, fine, is this car overvalued? What's the condition of this car? Should it be even financed? Is it in a state that, typically it's going to be able to repay? If someone borrowed money on that car now, it's going to be able to repay that loan. And we look at these 2 variables, and we move that information onto our marketplace, right? So the cars that are financeable basically they get listed on our marketplace. And so a consumer comes onto our platform and to look at cars that they can access, they can apply for loans for. So they come on the car, they see a car on the platform, they put in their details, basic details for their, typical things that you would need. So we go through that 100% digital application process, and it's funneled to our backend where we have our financial partners on the back end of that, typically reviewing various car loan applications. So our financial partners basically receive various car loan applications, and they're typically looking at the customer information, things like that, and are making digital offers to these consumers. And if a customer accepts, so one customer can come to our platform and receive 20 different offers, right? They then select the one that is best for them. And when a customer is, and this entire process takes, it can take you 30 minutes to conclude the application, and the bank will typically respond within 45 minutes. So you get your offer, you accept what you want, and then we connect the consumer fully to the bank and support the bank with what we call collateral management. So we're not just with our financial partners from an origination standpoint. We support them in terms of protection of their assets itself. So our platform typically and our technology helps the bank understand sort of the depreciation life cycle of the car. We also digitize the service and maintenance process for the car. We're also typically ensuring that car is adequately maintained, things like that. So we have a full end-to-end collateral management service where the bank is getting the best of quality in terms of post-disbursement management of that asset, right? And the reason why we typically framed our business model like that is that if I describe to you what an experience in a developing market would be, if I walked into a dealership in the US, for instance, or wherever, and I wanted to buy a car, I would walk in, I would ask a dealer that, I like this car, I want to go. Dealership will bring out his laptop, his computer, put in my details, process my car loan. A bank would make me an offer. The car would get disbursed without the bank meeting me, and the dealer would process my paperwork. I'll drive the car off the lot. The bank never has to interact with that car. There are agents or agencies that typically will handle sort of the collateral management itself. In the event of a default, the bank will call a repo agent. Repo agent will recover the car. The car gets moved to Mannheim auctions or Adesoji or whatever, will auction that car off. Bank gets his money. But that's an ecosystem that has taken something like 50 years to build, right? Or probably 100 years to build, right? It's gradually they've taken that, but that is a typical experience. Now, what people don't realize is that, all the services are typically provided by one industry or the other, or one player or the other, or one segment of the automotive industry or the other. And this ecosystem is typically what is missing. It's not connected. It's all fragmented. And so that's why you typically can't scale. So what tends to happen is that if you're a bank and you wanted to lend, you would have to start building out all these services all over again, right? And so what we've typically done on the back end is ensure that all these service providers are all together, they're all available, stitched on the back end, connecting the consumers, connecting the after sales units, connecting all these other guys as well that provide all these services, so that the bank can typically do what they would normally do anywhere else in the world. Just do the credit assessment and disburse, and your assets should be able to be maintained without you having to worry about that. And in the event of a default or whatever, recovery and disposal and cash recovery shouldn't be an issue. So that's why we have so many financial partners working with us. And that's basically the fundamental thesis around our business model is we have to make a decision. What do you want to do? Do you want to create the ecosystem, right? Or do you want to provide, the way we look at it is, let's provide the rails for people to actually transact and trade. And that's what I fundamentally meant by, if you look at the $90 billion industry that it is today in Africa, everybody typically is going to transact. And if someone doesn't take a step back and say, okay, let's actually support, the participants with the infrastructure to trade and transact, and typically there'll be exponential growth, right? But somebody has to take that step back, and that's the opportunity that we saw, and that's what we're typically focusing on.
Okay, no, that was great. That was a very fully packed response. But I wanted to ask you a quick follow-on, which is just in terms of how you go about doing this in the back end, right? So, you mentioned different aspects of the ecosystem, so consumers, banks, and dealerships. So how do consumers know about you? How do dealerships, how do you sort of reach out to dealerships and also the banks? Do you sort of like have salesmen, who go out building out these interactions, or do you rely on internet marketing? What sort of the approach there to reach out into the ecosystem?
Yeah, I mean, our sales approach is channel approach, right? So we have a direct approach where we have guys on the field engaging dealerships. For our banking relationships, those are more, we have a core B2B team, which is like, corporate sales or however it's defined. And then from a consumer standpoint, yes, we have digital marketing, also strong referral base, but that's also where the acquisitions that we typically make come in handy as well, because we look for platforms that have a strong connection to the consumer, to consumers, right? Where we can have bulk acquisition of consumers as well.
Okay, that sounds good. And from a monetization angle, how does the platform monetize?
Oh, the services that we provide. So we typically would charge per transaction so the loans that are disbursed, typically the consumer pays a service charge, the dealership pays service charge, the financial institutions also pay service charge.
Okay. And if I was to get a loan from you guys, for example, is there a range? I mean, what could I potentially get a car loan for?
It typically will be the bank that is disbursing, right? Okay. I've not seen any bank say this is too expensive for me. I don't think there's no car that is out of range for any bank, right? So it typically depends on your credit profile, how attractive it is for you, if you can afford to get it, and that basically will determine whether or not the bank would. And the banks will decline. Sometimes people apply and then the bank will say, sorry, you don't qualify. So it's not like everybody that comes on the platform gets qualified. Some people they don't qualify.
Okay. And when you were conceptualizing this business, right, I'm just wondering, what were the assumptions you had in mind, which you were thinking, okay, these assumptions need to hold true for me to go ahead to build out this business model?
So, I mean, for us, there's some key things we look at any market that we're going into, right? One, internet penetration has to be good because we're a technology business. Two, is there a need for motorization rates technically or lack of it, for instance, but is there a need for cars in that city, right? Do people need to get around? Three is the amount of competition within the banking sector, because our platform typically is ensured you need to have banks on the platform. So the amount of competition within the banking sector. It needs to be a place where, for instance, we look at things like tax per head, because, societies whereby there's more efficient taxation means that these people are probably much more in a financeable bucket, or they can be accessed from a credit perspective, right? Because they are taxable. So we look at tax per head, we look at GDP. It's not all markets that it's not every single city that makes sense, right? So this cocktail needs to be kind of working. And like I said, there needs to be, if there's a need for cars in the city, then there will be dealerships, right? That are selling the cars in one way or the other. In some markets, you find dealerships scattered all over the city, like in Lagos and Accra. In some markets, you find them more clustered, like in Kampala, in Rwanda as well, where in most landlocked countries, you find that, all the cars come in through the drive ports and are all warehoused in one place, and then everybody goes to buy them. So depending on how it's sold, right, it doesn't really matter. In Cote d'Ivoire, it's mainly brand new dealers that are kind of, taking the space now. So that's what I said, the demand for cars, then the dealerships come next. So those are the kind of variables that we typically look at.
Okay. And maybe moving on to the competitive landscape, how do you sort of segment this, in your mind? I mean, there's people who already were trying to solve this in an analog manner, but you are taking a digital first approach to how you solve the problem. So what does that competitive dynamic look like?
So no, I think at the end of the day, whether you're a direct lender or you're a bank or you're a tech, everyone can come to our platform. Typically, we are just connecting dealerships, and a dealer that wants to sell cars can come to our platform. So that's why like I said, we are building the infrastructure for people to transact, and that's our core focus. So I think that when you look at the competitive landscape in a sense, we don't really see anyone particularly doing exactly what we're doing, because what we're doing is we consider it to be not exactly the easiest path to take, but I think personally it's the most sustainable part and the part that can create value in the long term. But for us, we see a perspective whereby, regardless of what service you're providing digitally, either you're doing loans or you're doing auto sales or whatever, there's a place for you to play on Autochek.
Okay. And in terms of, because you've been around for how long now? 2 years, a year? The business? Autochek, yep.
So 13 months.
That's okay, 13 months. Okay.
Yeah, feels like 5 years, but 13 months.
Yeah. Okay. No, sounds good. And I was just wondering, is there any information you're able to share, around traction of the business, right? It's been
So, I mean, we've rapidly expanded into 5 countries where we're servicing. We have about 1,200 dealers using our solutions today to process loans. We've gone from 10 loan applications in our first month to about 46,000 as of last month. I mean, those are the kind of metrics across the board. Our app downloads have gone from 80% of our loan applications are processed through our app. We've gone from about 3,000 in month 1 to about 60,000 now. So yeah, across the board we've experienced. I mean, it's not surprising for me, because I think that, we focus on value that we're creating. We focus on great customer service, but there really is a huge gap, right? Like I did mention, right? So I think that there's a lot of people that typically need the service. The affordability levels are not there, right? And they're not improving. And yeah, so basically, I think that, we know that the demand is there. It's typically how do you service this demand? There are some people that are doing it directly, that are saying, you know what, I'm going to be the lender. There are some people that, are just going to provide the balance sheet. So I think there are various ways to attack the problem, but the challenge exists and must be solved. Must be solved for us to be able to become more productive as a continent, more productive as a country in Nigeria, more productive as a continent. Transportation poverty is real. And the reality is that, if we don't get mobility and the freedom of mobility at the back end for a lot of people, we are not going to be able to achieve a lot of productivity for people.
Yeah, no, I love your passion for what you're building. Sounds really exciting. And I was also wondering, at a global level, are there any companies you're modeling yourself after? Perhaps similar business models you've seen in other markets that you appreciate what they're building?
Oh, absolutely, absolutely. You always have to have sort of benchmarks that you're looking at. I mean, we look at everyone from Caro it started out in Singapore, but it's across Southeast Asia. We look at Droom in Droom and Spinning in India. We look at Cars24 in India as well. These are all unicorn style companies. We look at Kavak in Mexico. We look at Creditas in Brazil. We look at even Carvana in the US to an extent. These are all companies that we typically are looking at. To be honest, we like their growth. We like what they're doing. I think I mentioned Cars24 as well. We look at Auto One. These are companies that I think when we look at them, they're trading, they're doing financing. Some of them are in the maintenance segment or not in the maintenance segment. But one thing that is unique across all of them is that they're all trading and financing in one way or another. Some are doing directly. Some have an ecosystem-led approach. But and all these companies I mentioned typically have all attained, have all been reached more than $1 billion in valuation and are growing and continue to grow. Some of them have IPO'd, and you have to have those benchmarks, right? Of seeing what automotive technology company can look at scale, right? And in our case, we're an automotive technology fintech as well, right? So that makes it even more exciting for us. But you have to have these benchmarks. You have to have people that you're looking at all the time.
Okay. No, sounds good. So now you've 13 months and you're operating multiple countries. Can you tell me a bit more about how you think about growth and partnerships? For example, I noticed that in some markets you've expanded inorganically, in some you've explored partnerships. How do you think about growth and also Pan-Africa expansion?
Well, growth is about opportunity. We've done a lot of research across the continent in terms of what's viable, where should we be, what country should we be operating in. It's not, we're not doing this as we've done a lot of research. We know where the value is. We understand the markets that we should be at. We have a strategy to grow across the markets, and from our perspective, we are, we've been able to. There's what we call the regional nodes, where West Africa is Nigeria, East Africa is Kenya. We've established our East and West Africa nodes, and then we'll deepen our expansion. Even as we have started off within those markets. Of course, we want to get into South Africa, we want to get into North Africa as well. Those are actually extremely viable markets when it comes to credit and consumer credit and the automotive industry as well. And so from our perspective, when you look at the market, you have to assess what's the opportunity. And for us, like I said, there are certain variables that we look at before we go into each market. We're not a business that typically will exist in every single city, simply because of the variables I talked about earlier on, right? It's we're a business that typically thrives in commercial capitals. And that's why we take a very strong city-based approach across the continent. So what we typically would look at is, what is the opportunity of going into these markets? Of course, you never want to go into a market and have to start from scratch. And you never want to go into a market and, typically not know what you're doing, because you have to take into consideration local nuances, local context into everything that you're doing. And so the partnerships become very key. In terms of the acquisitions that we make, that's also part of why we do what we do, right? Because it helps us accelerate into any market we're going into. The third thing as well, basically, would just be ensuring that, by the time you weigh all these variables, you typically go for the best. There's no playbook that is set that works across all markets. You have to look at every single market as an individual market. You look at the viability of the market, the strength of the market, the potential in terms of the market size, and that should determine the strategy that you basically are going to use.
Okay, that was great. And in terms of fundraising, we haven't seen a lot of action in the automotive startup space in Nigeria, besides Move's $16 million raise across debt and equity. And you also recently closed your seed round of $13.1 million. As you've recently raised this round, can you tell us what investors typically look out for in businesses like yourselves before writing a check? And what sort of KPIs are they tracking you on ahead of your Series A raise?
I mean, what I've seen, everybody just likes growth, right? I think the most important thing is that, when you start moving into the venture space, they're typically modeled after the capital markets. At the end of the day, everybody expects that if you're a high growth company, you're going to end up, on some index or the other, and you're going to be doing your earnings calls. And so if you look at the entire sector and how it's designed, right, you start with your quarterly reports and all that stuff, right? So I think at the end of the day, just like in the capital markets today, the most important thing is growth. Any company that stops growing, immediately the shares dive, right? That's the call of death, right? You missed your estimates, growth is slowing, means you can't provide any kind of return for investors, right? So I think at the end of the day, the most important thing people are looking for is sustainable growth and ensuring that model that is valuable and novel. Then even when you start out at an early stage, as you actually move into growth stage, you should even be growing faster, because at that point in time, you'll move past early adopters, and if your market size is really there, then you should actually be mopping up more and more consumers, right, as you scale out. So I think those are the kind of metrics that people typically look at. Fundamentally what your growth rate is. I don't want to go into details around your customer acquisition cost, but everything typically funnels down to, if you look at the fundamental cumulative compounding growth rate, right, you can build out all the necessary metrics that you need to look at to scale them. But I think that is a fundamental thing that people should look at. Yes, you have a business model, you're building it out, but at the end of the day, what are the friction points? What are you taking out? And if consumers really like your product, if consumers are really adopting your product, then your growth rate without actually, these growth rates that are fake or anything. But I mean, typically, are you creating enough value that consumers are swarming your product, right? And that's the way we think about it. That's the way we ensure that, that's why we go into the sectors that they are high growth rate sectors. And from what investors are typically looking at the end of the day, an investor is looking for where they're going to get the highest rate of return. The highest rate of return will come from the fastest growing companies, right? And fastest and most sustainably growing companies. So I think if you have that baseline and you're growing at that rate, you'll be very attractive, and you will remain very attractive.
Okay, great. And considering Nigeria's large population and low number of jobs available, it tends to be quite compulsory for Nigerians to go the entrepreneurship route. But we know it can be quite a daunting decision. So I'm wondering, for you, what made it seemingly easy for you to take the risk of entrepreneurship, and how easy was it finding financiers for Autochek?
Well, it's not easy. I think just clarifying, it's not easy at all. I think, when we speak around these interviews, I'll tell you that every day there are new challenges, there are new problems. We are always solving problems. We're always solving challenges. It's not just being very clear around that. And I think people that, have to understand that the reality is that maybe there's 10% or 5% enjoyment and celebration, and it's 95% work and stress all the time, right? And that's just that. It just comes along with the terrain. For me personally, it was just about where I could create the most value, right? I've always been fascinated by what people have done in this world, legacies people have left in this world, and I've always just wanted to be able to have my own piece of value as well, right? When I look back, I want to be able to say, look, this was my own contribution while I was active, while I could do what I could do. I did this little piece. That has always driven me. I think, in terms of fundraising, just to be clear, there was a time when I was trying to raise capital and I wrote to 3,000 different VCs, and I didn't get one. I got one response, and someone responded with a no, right? Everybody else didn't answer me. But you learn over time, right? What or how to get it done, right? So I think no one should ever think that I'm just trying to explain that, if you see someone and say that, it doesn't mean that there hasn't been failures in the past, right? So I think that, and I mean this, actually, I think it was over the course of a month, we wrote to every single person. You understand that kind of thing, trying to ensure that, I get it. And I didn't get an answer. So it's not like I haven't had periods where, I've tried to raise capital and I couldn't. But you learn, okay, why would I write 3,000 people and not get a response? And you have to go back and think, what are the things that I'm not doing right? What do I need to learn? Who do I... Hello?
Yeah, I can hear you.
From how do I learn better? And that's how you improve. So I think that raising capital is key, but I think that it's not exactly an easy process. But I think that at the end of the day, capital must match what the demand, what you are trying to achieve, right? I think the big mistake with a lot of people is that, please just give me money so that I can survive, or give me money so that I can appear in the news, or please, my idea is so good, you have to trust me. No, I think that people have to realize that we're in a modern age, and every single person you're speaking to is speaking to another 200 people from different countries that you're in, and they are speaking to people from countries whereby economies are great, security is great, there's no risk or discount in anything, and they have to make a financial decision on whether or not they're going to invest in safe, secure, or what growth rates do you have to be delivering in a frontier market that someone will bypass a safe haven, right? Investment, and come and divert their cash towards a frontier market, right? You don't expect that you're going to match the same growth rates, right? Your growth rate has to be. Exactly. So I think fundamentally what people need to realize is that, at the end of the day, it's not a charity, and nobody is there to really understand, yes, you have an idea and you have what you're doing, but at the end of the day, it's about financial returns. If you understand that the investors you're speaking to have a fiduciary responsibility to provide a return to their LPs as well, then you also transfer that mentality and understand that if anybody is investing in your company, you also have a fiduciary responsibility to ensure that there's a return on investment, because fundamentally that money actually belongs to people who are hoping that that investment is going to guarantee a future for them. So if you have that fundamentally, then it's your responsibility to ensure that whatever you're going to plow that money to creates growth for the company and can provide return on investment for your shareholders. So I think with that mindset in place, everything you're doing typically should be around, what's my business, what am I executing, and is it actually valuable, and is it going to provide a good return at the end of the day? And then you have to test. And I think that there are stages where you approach investors, there are stages where you're testing and knowing. I mean, we can go at this, forever and ever as to what the best approach is. But I think just having a good mindset and understanding that at the end of the day, it's an investment and it must provide a return. You must be very clear about how it's going to provide that return at the end of the day, right? I think there's a concept somewhere along the line that maybe this money will never need to be paid back. And I think if you have that good concept at the end, at the back of your mind, you should have clarity around how you go about it.
Okay. And I think it would be good to also spend just a few words on the challenges. So what are some of the major challenges you've had to overcome as you've been building the business?
I think, just in any kind of digitization project, it's always the first and biggest problem is adoption, market adoption, right? Yes, there are 30,000 potential customers, but how many of them are going to be your first adopters, right? And how do you get them to become your first level adopter? So I think adoption is always a problem. Even with financial institutions, who are going to be the first? There are banks everywhere, but how many of them are going to actually? And yes, signing up for your product is different from becoming active and using the product in a way that you consider it to be the best service to your consumers. So I would say the biggest challenge is always product adoption, especially where you're taking a marketplace model where you have service providers supposed to be using the marketplace to provide a service to your end consumers. And I think that is typically where I consider to be the biggest challenge, getting people to adopt the product, use that product and use it the way you want it to be used. And then I think customer acquisition as well, so education, this is good for you, this is not good for you, how best to reach them, how best to get them to understand the products is always a challenge as well. I think those are that's kind of what I would consider to be the biggest challenges.
Okay. I think one of the recurring issues in the Nigeria tech ecosystem is the competition for software engineering talent and the exodus of Nigerians to Canada, UK, and other countries. How are you assessing these issues, and to what extent do they affect Autochek or the border? Do you hear me? Etop?
Yes, I'm losing you for a second. I was losing you.
No worries. Let me just go through it again. So I was asking about so one of the recurring issues in the Nigeria tech ecosystem is the competition for software engineering talent and the exodus of people to Canada, UK, and other countries. How are you dealing with this type of issues, and to what extent are they actually a problem for the Nigeria tech ecosystem?
So you can't call it a problem because the developers are making tons of money, right? So,
okay.
It's not a problem. People are getting paid, and I think that it's great for the ecosystem that the talent can be appreciated internationally. I think COVID has done a lot in terms of a lot of international companies, finding that Nigerian talent particularly can be considered to be world class, right? So it's an area. It's like our music now, right? Nigerian tech talent is going global, and I think we should be very proud of it. We should support it. And I think, look, one of the things I love about Nigeria is if you look at the music industry, the many people knew that you could make money, right? People are flooding in and trying to drop the next single, right? I think, that's why we have a large population. As long as people know that, you mean somebody from here just wrote code and got employed by Microsoft, you find another 100 going to go and learn that code, and they'll learn it in 10 times quicker, 10 times shorter than that first person took, and it'll take it much harder. So I think invariably it's the best thing that happens in the ecosystem, the recognition of tech talent. I think that it works both ways in a sense where there's a lot of attraction from people who didn't believe or think about this being possible. And look, we're in a society where people need jobs. So I think you have to look at this holistically, right? People need jobs. And so if there's a way people can get jobs, like I know a guy who resigned from us and got a job working remotely. And he's going to reduce his expense because he was working for us in Lagos. He's reduced his expense by like 70% because he's moving to Ibadan, and he's earning like 4 times or 5 times more. I'm like, this guy is good. You understand? It's amazing, right? He moved to a much cheaper location, and he's earning like 5x of what he was earning. I mean, you can't be sad for that kind of person. But I think more developers are going to come through simply because of how much people are earning, right, and how possible it is. And I think with that being said, yes, there's an attrition. There's an attrition problem, but I think also, it's helping the ecosystem because as the developers are there, you find tech talent that can actually build out, much more solid products that will receive funding and capital getting, so it's positive, fundamentally. I don't think it's a problem. I think, yeah, during this stage, but I've interacted with every single market I've interacted with. Go to India today, where they have a large tech ecosystem. In San Francisco, saying attrition is high. There's no way attrition isn't high. And who pays the highest in terms of developer fees? Who pays the highest? The US pays the highest. In India is paying higher than we do now, right? But it didn't start that way, right? As the tech ecosystem develops and companies scale, right, you can afford to pay more. So at the end of the day, it's actually creating a better playing field. Yeah, some people are complaining because it's more expensive and this and that, but it's not bad. It's a good thing. I think it's the equivalent of saying that, yeah, 10 years ago, you could get the top Nigerian artist and maybe pay them 500,000 naira to appear for a show. But if you're going to get them now, they're going to tell you, provide me with a private jet, give me this and give me that. You can't be sad for that, right? You have to be happy for that. Exactly. So it's the same thing. I think it's the recognition of talent. So my view is that, the best way people can support is by creating ecosystems that can train people quicker, faster as well. And once you have that pipeline, it will grow. So I think it's been there, but I think overall it's a positive for us. It's not negative.
Okay. All right. So this is going to be my final point. And I like the gentleman you referred to who moved to Ibadan to expand his margins. I think he should certainly raise VC funding because that's the kind of mindset that's required. Okay. So final point. So we read quite a lot on my team. Or at least I encourage my team members to do so. So to wrap things off, it'd be good to know what you're currently reading or what book you've read, which was quite impactful and stuck with you as you built your business. Etop?
Hello?
Yes, I can hear you now.
Hello?
Yep, I hear you now. Should I?
Now?
Etop?
Yeah, can you hear me now?
Yes. Should I go through the question again? No, yeah, let me go through it again. So I was just saying that we read quite a lot on my team, or at least I encourage my team members to do so. So to wrap things off, it'd be good to know what you're currently reading or what book you've read, which was quite impactful and stuck with you as you built your business.
I mean, the books can be very impactful, right? So, I mean, I'll talk. Wait, let me just. If I want to say something that I think has been maybe quite significant for me, has been Hard Things About Hard Things by Jason Horowitz. I think that book really snapped me into reality in terms of, you finish reading that book and whatever you think you're going through, it's like you realize that you're not alone, right?
Okay.
Yeah, so I think that's a very good book for people that think that it's tough, that they're going through. Like if you get to that point, it's like, I think things are too tough. Go read Hard Things About Hard Things, and you realize that there's only one route to get there. And I think that helps. But currently, what I'm reading, I'm reading three. I don't necessarily read one book. So I'm actually reading 4 books now. Not like I'm breezing through, but I kind of go to like maybe one quarter, I go through 4 books, and so I'm reading them because I read and then I stop, think, things like that. So I think for now I'm reading As a Man Thinker, James Allen. I like to say As a Person Thinker. It's a very good book on just the mind and the power of the mind. Tim Ferriss, Tool of Titans, an incredible book. I think he's done incredibly much for the world to actually release a book as diverse as that. I'm also reading the biography of Lee Iacocca, who used to be the president of GM and then Chevrolet. He's a legendary automotive guy. And then No Room for Small Dreams by Shimon Peres's biography as well. I'm also reading that. So those are kind of books I'm kind of in touch with now. Great books.
Okay, no worries. Look, Etop, this was a very insightful conversation, irrespective of the internet connectivity issues. But we found this extremely insightful. We hope to stay in touch. And for you that are listening, the video will be posted on our YouTube page, and we'll have a note out on Autochek out in the next few days. Thank you very much, Etop, and look forward to staying in touch.
Thank you.
Okay, thank you. Bye.